Sound check, sound check. Can you guys hear me clearly? Sound check, sound check. 1, 2. Sound check. 1, 2, 3. What's up, guys? Welcome back to the class. Hi, Damien. Hi, Jamal. Hi, Frog. Welcome back. Risky is always here as well. What's up? We have L. Now, before we start our live stream, just want to check with you guys. Can everybody listen to me clearly? Is my sound loud and clear? Hello, Melco Alejandrino. Melco Alejandrino, right? Are you from Philippines? That is a really nice name. That is a really nice name. We have Momo MGMG Lavenda. Charles Gall is here as well. Well, I see a few new names. We have Charles. Hi, Charles. Where are you from? We have Firik Christina. We have Cora. Cora say evening. I wonder which country you're from. And we have Ong Kao Kao. And let me see. Who do we have? We have Tamzem as well. Hello. Okay. And we have Towns. Towns is from Australia, I assume. Welcome. We have Cora from Australia. Everybody in here. Yeah, we have like 30 viewers in the chat box now. We have Somo as well. Hello guys, how are you guys doing? How are you guys doing? Everybody good? Everybody good? Alvin asks, what is this live talking about? Giving signal? Well, it depends on what signal you're talking about. For me, I'm a big fan of filtering out noises and only, give my students, my audience, signal. But signal not as in like buy and sell signal, but signal and knowledge information that may help you to become successful in your path of trading. So yeah, stay tuned. Charles say, first time joining my class. Welcome, Charles. Thanks for investing the time with us, with me. Today we're going to talk about something that is quite interesting. We're going to touch about auction market theory. And we will also talk about my kind of risk management so that you guys can understand. Okay? So that you guys can have a better understanding on what is, risk and reward ratio. So now we have like 42 viewers. And some of our friends right here is having a little argument. Guys, chill. Right? Chill. It's fine. We're all in the same class. Okay? All right. Charles say he is from Singapore. Hello, Charles. Welcome, welcome. It is a wonderful day to have you guys here. All right. Let's go. Okay, let's go. Let's have our class today. Now, we have two directions, not one direction. We have two directions. Direction number one would be teaching you guys about auction market theory first. And direction number two, we're going to start off with teaching you guys what is the proper risk management first. Now, I want you guys to make a vote. If you want to learn about auction market theory, type AMT in the chat box. And if you want to learn about risk management, and type risk management or type just risk in the chat box. Okay, I want to see the boat. Okay, come on, interact, guys, interact. Don't be lazy. It is a class where we're gonna learn, analyze, trade, and grow together. Okay, who wants to learn about auction market theory? If you want to learn auction market theory, type AMT. If you want to learn about risk management, type risk. Okay, we have Firik and Christina. Charles is typing as well. Hello guys, welcome, welcome. We have some viewers from YouTube, TikTok. Charles say both. Why want to choose, right? Why want to choose? Okay, sure. All right, welcome to the class. My name is CG, and today I'm going to share with you about risk management, about auction market theory, and also if the market allowed us to trade, we perhaps will go to the sea and try to fish and do some casting together. Okay, now before that, let us dive deep into today's class. Okay, since that you guys want both, I'm gonna start off my personal preference. Okay, we've been discussing about auction market theory a few days, so today we're gonna talk about something about risk management. Okay, now before that, let us take a look at it. Make sure everything is smooth. All right, so guys, welcome back to Profit in Peace. Profit in Peace is a trading system that I designed specifically for you guys to trade in the financial market peacefully. Okay, not stressfully, peacefully. Okay, and how do you do that? You do that by learning and understanding knowledge, information, and point of view that might equip you to become more mature, so that you won't react to the market price action merely just by your emotions. You can also, react to the market in an accurate point of view. Okay, so what do I mean by accurate? Now, first thing first, you need to understand something that is very counterintuitive. Very counterintuitive. Okay, a lot of time when new traders, when me myself 6 years ago come into trading, I'm always thinking in a very binary kind of mindset. What is a binary mindset? A binary mindset is a mindset of good versus bad, black versus white, right versus wrong. Okay, it is a binary mindset. Left, right, girl, boy. It is a binary mindset. Now, you got to understand something. In the financial market, the market doesn't actually pays you for being right. And this is so hard for us to digest, right? This is so hard for us to understand because most of our life we've been trained and educated in a way that we must pick the right choice. We must choose the right answer. And we must always choose something that is right. Okay? So, but when you come to trading, you need to understand trading does not pay you for being right. And if you sit back, relax, and pay attention on what I'm trying to tell you, you will understand why. Now, our entire life, we were trained to be right. Okay, we were trained to be right. And how we were trained? We were trained from school since young. Our entire education system is a system that trains us and reward us for being right. Everyone with me? Okay, it's training us to be right. Okay, right answer. If you get the right answer, you will be rewarded. If you get the wrong answer, you will get a penalty. And each result is judged separately, right? You can have science, you can have mathematics, you have an English, Mandarin, moral. Every subject that you choose, it is judged separately. So here's the thing. In our education system, in how we learn and how we grow as an individual, as a human being that can function normally in the society, it means that accuracy equals to success. The more accurate you are, the more successful you're gonna be, right? We were always trained to be right. But you gotta understand something else. Okay, you've got to understand, in school, right? In school, wrong ends the game. Okay, but in trading, being wrong begins the game. Okay, maybe you guys, let that sink in. Let that sink in a little while, right? In school, wrong ends the game, and in trading, wrong begins the game. Okay, what does that mean? Now, in school, if you get a wrong answer every single time, it means that you're being kicked out from the test. Okay, you are going to be, you know, you need to, your grades are going to be bad, right? So if you get the wrong answer and the grades are bad, well, it ends the game for you as a student. Okay, but in trading, being wrong is the entry that allows you to begin the game of trading. So you need to understand, you are evaluated over a series, not a single attempt. Okay, not a single attempt. Now, is everyone with me? Do you guys understand what I'm trying to say? Charles say, wow, your class is really philosophical. Well, I'm a big thinker. I read a lot, I digest a lot. And a lot of time, I think many traders, when you go to the trading, it is a philosophical mental game that you're playing instead of indicators and technique, right? That is why I teach about thought process. Guys, are you guys still with me? In school, being wrong ends the game, and in trading, being wrong begins the game. If you understand it, type understand in the chat box, okay? So here's the thing. What is the main difference between trading and being in an exam, right? When you're in an exam, when you're taking a test, right? You got to understand, when you're taking a test, you're given 4 options. Option A, option B, option C, and option D. Guys, in an exam, even though that you have 4 options to choose, but still the answer is already there, right? Right? The answer is already there. In exam, the answer is already exists. But guys, in trading, the answer is always changing, guys. Right? So how can you actually learn? How can you actually make a correct answer when you're trading? It is almost impossible. In exam, you have 4 answers, A, B, C, D. You take B, it must be C. If C is not right, it must be D. If D is not right, it must be A. Even though that you're wrong, the answer is that. But in trading, it is not A, B, C, guys. In trading, the answer is A become E, E become Z, Z become 7, 7 become 8. And how can you use accuracy to really trade, to profit from it? You see, how can you really win the game? And the question that I want to ask you is very simple. Why are you trying to be right in a game where the answer keeps moving? Right? If the answer is constantly jumping around, right? Trading, the answer jump from A, C, C, E, E, Z, Z, 7, 7, 1. If the answer is jumping around, why are you trying to be right in a game where the answers keeps moving? Right? Risky say, yes, the market is always changing. It is full of uncertainty. Yes, the point I want to make is, if you use a mindset of accuracy, of wanting to be correct when you trade, then you are actually missing the whole point about trading. Accuracy is not your advantage in the market. Got it? And this took me so many years to finally understand and internalize deep inside my psychological process so that I can become a mature trader. Because we spend our whole life wanting to be accurate. We spend our whole life wanting to be correct. We spend our whole life wanting to be right. But accuracy is not going to be your advantage in the financial market. So this is what I want to tell you guys, okay? Now, I want you guys to remember something that is extremely, extremely important when it comes to trading. In trading, I want you to forget about accuracy. And I want you to really scroll that in to your brain that asymmetric is much more important than accuracy, right? I want you guys to remember asymmetric. Asymmetric is much more important than accuracy. So is there any Mandarin speaker, Chinese speaker in our group? If there is, I'm going to use Mandarin to explain what does it mean of asymmetric. Asymmetry 的意思呢，就是不对称性。OK， 不对称性。So asymmetric is much more important than accuracy. Okay, so you lose small when you lose small so that you can stand a chance to win larger. Okay, Alvin say that is Chinese. 所以 asymmetry 的意思呢，就是不对称性、非对称性。然后在我们的这个课程里面，我们的这个交易的生涯上，我们不能够用准确度，不可以用准确的这一个思路来交易。So asymmetric is very important. Asymmetric is much more important than accuracy. So in trading, you're playing a different game. Okay? So here's an example for you guys to really understand what I'm trying to tell you. Okay, a really, really good example. This example is this. Some jobs pay evenly and some pays unevenly. Okay? Some jobs pays you stably and some jobs pay you unevenly. Now, what do I mean by that? Now, even pay means teacher, engineer, accountant, right? Where your salary actually grows step by step, okay? And your effort, the more you work, the more predictable your reward is going to be, right? This is what I mean by even pay. Accountant, engineer, teacher, and chef, right? This is called even pay. Now, what do I mean by uneven pay? Okay, what do I mean by uneven pay? Uneven pay means singer, actor, founder, investors, right? This is uneven pay because, now here I want you guys to pay attention. Why singer, actor, founder, investor, and trader being paid unevenly? I'm going to give you an example of a singer, right? Guys, do you guys have your favorite artist or singer? If you have, please type in the chat box. I'm going to use that artist as an example so that I can understand you guys are actually following me. Okay? Anyone have your favorite singer? Please type in the name of your favorite singer. Your favorite artist. Okay? Type it in the chat box. Wow, Risky say Andy Lau. Wow, Risky, how old are you, man? Well, Indira say Taylor Swift. Okay, Indira say Taylor Swift. Okay, I'm gonna go with Taylor Swift. Okay, Taylor Swift, world famous. Everybody understand, can be relatable. But risky, that is some really old school idol you have right there. On Cao Cao say Jackie Chan. I'm gonna go with Taylor Swift. Okay, now Taylor Swift, for example. Taylor Swift can write 100 songs and nobody actually get to know her before she's famous. And Taylor Swift can write 1,000 songs and nobody knows her. You feel me? What I'm trying to say is that singer, actor, founder, how they operate is they operate in the realm of asymmetry, which means that Taylor Swift can write 1,000 songs, and if none of that songs actually gone viral, none of us will actually know who is Taylor Swift today, right? And if Taylor Swift write the one song, only one song that make everybody get to know her, and then she is being paid unevenly, right? So here's the thing. This is the part where you need to understand the weird side about trading, right? Trader actually belongs to the uneven side, right? An uneven system requires you to have a different kind of thinking, okay? You must be willing to understand. You may take 1,000 songs and 1,000 trades and you're still not profitable. But it only takes one single trade and one single song for you to be successful. That is what I want to tell you, okay? So Here's what I want you to understand. Uneven system requires serious thinking. Okay, uneven system requires serious thinking. Now, a lot of time when a new traders come into the market, what you guys do is that you guys actually judge yourself by one trade. Okay, one trade, one verdict. Okay, one result and one verdict. It's like what you're trying to do is that you're trying to use the mentality of you going to the exam, right? You're trying to use the school mindset. You're trying to use the mindset that's being built in the school to operate in a world that doesn't reward you like the school, right? So in the financial market, trading judge you by a series of trade. Okay, trading judge you by a series of trade, which means that instead of using one position to judge your result, your edge, you need to have at least 50 to actually know. So many results, one edge. So in trading, you gotta have a lot of approach to reveal your true edge. So this is what I'm thinking, what I'm trying to teach you. Uneven system need serious thinking. Just like Taylor Swift. If Taylor Swift, every song that she write, she want to be famous, do you think that she will keep on writing the song? She won't be keep on writing the song if she is expecting every song will become a pop song. If Jackie Chan, if Jackie Chan is trying to win an Oscar from every movie that he make, Jackie Chan won't be keep on making movies today. All it takes is one Oscar, but it takes thousands and thousands of attempts to win that one Oscar. You feel me? So this is what I say by uneven system requires series of thinking. Now, if you guys can understand what I'm trying to teach you, type understand or type yes in the chat box, okay? So here's the rule. Here's the rule that I want to really, I want you to like ingrain and carve deeply in your mindset when you trade, okay? Wrong is the new norm, okay? Wrong is the new norm. Losers is small and win is large. So this is the magic rule of asymmetric realm. Okay, wrong is norm, losers is small, and win is large. You gotta accept that you gotta be wrong most of the time, because most of the time the answer is constantly changing. If the answer is constantly changing, you cannot expect to get the correct answer every single time. Because that you cannot get a correct answer every single time, it means that your lot size, your losers must be very small. And when the time and the opportunity arrive, the win is way more larger than your losses because you pay the due. So this is asymmetric. And Risky say, but wrong will lose money. And yes, wrong will lose money as long as the money that you lose won't trigger you to put that emoji of crying. There's a few types of losses. You see, if you're risking 50% of your account every single time, of course you're going to feel pain. But if you're risking only 1% of your account every time, you won't have that kind of emoji. Okay, so this is the first class that I'm teaching you guys today. It is about a small history of the foundation of risk management. Before you learn how to calculate lot size, before you learn how to really understand the risk and reward ratio, you gotta understand the game that you're playing, right? This is the game that you're playing. The game that you're playing is being wrong is part of the game, okay? Because the answer, I think this is the most important one. The answer is constantly changing. If the answer is constantly changing, it's gonna be wrong, guys. You're gonna be wrong most of the time. Okay, that's it. So yeah, that's it for the risk management. Okay, and when we talk about like auction, market theory, yes, maybe later. But right now we're gonna dive deep into the market and let's analyze the market together and see, do we have any opportunity to trade together today? All right. Okay, now yesterday was a happy day for me. Okay, a quick recap on yesterday trade. Yesterday from 2 p.m. to 4 p.m. I taught you guys about auction market theory, on how do we use, the mindset of auction market theory to not predict, to understand the market state instead of, predicting the market direction. Now, yesterday we went through a few trades. We analyzed silver, we analyzed gold, and we analyzed euro US dollar, and we end up, having a really good chance for us to trade in the US dollar and Swiss franc. And guys, if you guys did follow my trade yesterday, please click yes, because it was a wonderful trade. Okay, it was a wonderful trade. So I'm gonna give you guys a quick recap on what we actually spot yesterday. Now, first thing first, let's take a look at the 4 hours time frame. In my trading strategy, the trading strategy that we use is called ARM, Agreeable Rotation Model. And if you guys already learned Agreeable Rotation Model with me, then you understand what is I'm on and what is I'm off, right? I'm on and I'm off. And we've filtered out a few Forex pair. And yesterday, we finally get ourselves an I'm on pair that we can actually trade. Okay, so how do we actually determine an I'm on? Okay, I'm on pair. For example, first thing first, we're gonna go from the major time frame, which is the 4-hour time frame, for us to get a good glimpse on what is the macro trend actually going. Now, the execution time frame that we use for intraday trading is gonna be 5 minutes. But we need to first understand what is the big environment is happening, right? So yesterday we went to USD CHF, and if you take a closer look, you can see that it is quite obvious the market went from compression, and then it went from breakout, and then another compression, right? And then another attempt to break out. Now, if you really look at the market this way, it almost feels like the market is chaotic. But still, we cannot merely use our eye to see and spot what is happening in the market. More importantly, you need to really use some of the invisible force, to really understand what is going on in the market. And how do you can spot the invisible force? Well, for me, I use the fixed range volume profile. Now, the fixed range volume profile, I do it like this, is where I'm gonna scan. I'm gonna have a good glimpse on, where is the spot that the market actually traded, where buyer and seller agree to trade fiercely, right? And right here you can see there's two type of color, green color and red color. Green and red, it means that, the more thick and the more longer, the green and the red color bar is, it means that it is actually the point where buyer and seller agrees to make most of the trade. And what we are trying to do, is that we try to understand that, is this the zone where the market is trying to, play around with? And when I mean play around, I mean agree that we are going to play around this price. Okay, and based on yesterday our analysis, we found out that, after the breakout, the market tries to pull back and back to a zone of a new continuation, where we forecast that around this area is going to be ARM on, Agreeable Rotation Model on. Okay, and yesterday, after we make a few analysis, we go to 1 hour to see, is it really like ARM on? And guys, this is, we place a short trade around here, okay, where the market is going to play around this area. And then we go to the 5 minutes yesterday, and then we make some really nice profit together. Okay, now guys, if you guys actually follow this trade USD CHF, don't feel shy to share, you know, the joy with other students as well, because yesterday for this trade, me myself make some quite amount of good money. The lot size is bigger, but it managed to hit my TP. You know, it play around. I opened the position around like 4 p.m. and I managed to close it around 6 p.m. So I wait for like maybe close to 2 hours for the trade to end. But still, it is like extremely good trade. Okay, I make like 5 figures for this trade. Lot size is huge, but I'm willing to take the risk. Okay, so any of you actually, you know, make profit from this trade, don't feel shy to share, you know, the profit in the chat box. Okay, now are we gonna use, you know, use this zone for us to trade again? Well, for me, I personally don't like to trade this way. I don't want to have that kind of bias. So therefore, what I'm gonna do is that I'm gonna erase, you know, I'm gonna erase few drawings. Okay, I'm gonna erase a few drawings so that we won't be, you know, we won't be being biased by the trade. So now, first thing first, we need to see how does the market actually change. Based on our hypothesis, the market is really, you know, happily trading around this zone. Okay, this is what I mean by ARM, agreeable rotation, where the market is going to be rotating. Okay, but we need to go to the longer time frame to see, is the market still moving in a zone that is, oops, sorry, okay, in playing in our favor. Now, based on what we see right here, let me take a closer look. Okay, for USD CHF, I'm gonna erase this. Okay, as a matter of fact, let's erase everything. Okay, let's erase everything. It is a habit of mine. I try to, you know, have a refresh, have a reboot, so that I can really clean all the bias that is in me. If I didn't clean it, what happened is that I will sort of like self hallucinate and tell myself this golden line right here is still gonna be magic. I'm still gonna make profit from this. So usually my trading habit, you know, a ritual of mine is that I always erase, you know, the trend line, everything after every single trade. But because this is still in a zone, so I think we can still try to see, is it possible for us to, you know, spot some entry in USD CHF. Okay, so guys, are you guys ready to do some live analysis, trend, some intraday trading together? If yes, please yes in the chat box. And more importantly, outcome is none of my business. Okay, I'm not gonna take a look at the outcome. We are gonna do this intention together. We're gonna increase the probability of success together, just like we did yesterday. If the market didn't give us the opportunity, we're gonna like, you know, skip. Okay, if the market allow us, you know, to be aligned with it, then we're gonna probably give attention, not pay. Okay, now first thing first, let's take a look. We start off with 4 hours. 4 hours for micro trend perspective, 1 hour to really see is it arm on or arm off, and 5 minutes for execution. So right now we start from drawing, you know, the key levels of support and resistance by really locating the wick. Okay, not locating the body, sorry, body. And I need at least minimum 3 touches of the body where the price is actually close, you know, around that. And it seems to me this is not the right level. You know, we only have like one. This is not a level, not a sustainable one. So we're gonna use this one. We have one. This is also not the one. We only have 1 touches. We need something more. We need few more touches. This is much more reliable. Okay. So we have like 1 touches, 2 touches, and around. Also not that reliable. We want something much more much more solid than this one. Okay, I think we got it. Okay, 1 touches, 2, 3, 4, 5. Yeah, this is as close as you get. Now, before we move on to right to draw the next line, we need to use this one, which is the fixed range volume profile, to check is it the line that we draw, really accurate, reflects the buyer and seller momentum. Okay, so yes, the line that we draw right here is kind of close, but it's not that accurate yet. The correct volume that, where the most volume is actually happening is still around here, which is 0.70 cent, 77. Okay, so it's 77 cents. This is a much more accurate one. Okay, and then we're gonna start by drawing the second one. Yep, this one would be much more reliable. And then we're gonna spot for, we found the key level for, the resistance level, where the buyer and player, agree to play around there. And then we now need to go on and move on to find, the support level that most of the buyer and seller actually react toward as well. So now we're gonna use, to spot the one that is accurate around here. It is almost like the market didn't really move that much. It's almost the same as what we draw yesterday. Nope. Yep. Okay, now we got it. Yeah, almost the same like yesterday. Now the next thing would be understanding, is it the market currently in a state of balance or imbalance or compression or breakout, right? So the market always moves like this. It always moves from balance, okay, and then it start to move with, compression, and then after compression the market will try to attempt for a breakout, and the breakout usually will ends up being pulled back to the zone again. If it's being rejected, then it will end up continue to a different way. But usually 80 to 90% of the time, the market always, rather than, continue, it will always prefer to go, after the pullback is being pulled back to this area, and then it will start to, play with this zone again. So it is two type of trading strategy. For me, when I'm trading longer time frame, for this one, I'm trading SWP, okay? So SWP means that second wave probability. Okay, so second wave probability means that I trade, I monetize on, I make money by price rejection. Okay, I make money by price rejection. This is called, and reject by where? Well, reject by the previous balance zone. Okay, and for us, when I do intraday trading, usually when I'm on live stream, what I do is that I do ARM, okay, which is Agreeable Rotation Model. This is my intraday trading strategies where I make money by price acceptance. Okay. Now, if you guys are with me for a few days already, since the very beginning, you understand that most of our trade in intraday trading is all about ARM, right? So the main difference is if we want to make money, if we want to, do like long-term trading, we're going to aim for second wave probability. And if you want to make money on intraday, well, we're going to make money by price acceptance. And this is price rejection. So if I'm looking for, price rejection, it means that we are looking for compression that might works, okay? But if we are looking for intraday trading, we are looking for price that is not working, fail to break out, come back in again, and then we're going to be trading and make money from price acceptance. Accepted by where? Accepted by, the continuation of this entire zone. Okay, so this is the trick. Okay, so I'm going to take a snapshot from this group so that some of you can really learn from the trading strategy and really get familiar with how do I trade. Okay, so here's the part. Now, the next question would be, is USD CHF going through a process of, price rejection? Now, based on what we see, do you guys think that this is I'm on or I'm off? Right? Is it I'm on or is it I'm off? Okay, so here, well, obviously, there's a compression where the price is trying its very best. The price is trying its very best for a compression breakout, but the breakout actually failed. You see, it forms another lower lows, okay, lower lows, and then it is forming a compression that is going, downhill again. So it is on, but still it is in a very odd kind of situation. Why? Because it has already moved. For our entry, we are looking for, entry that touches here. This is our key entry, right? So I'm going to set an alert at this price, which is 77 cents, 0.77551. Now, it is odd because that it is currently in the middle ground, okay? It is on, but it's already it is already on. It has already happened. Okay, we make the trade yesterday. We make money from where? Well, we make money from here, right? We make money from this trade, and then we place a short trade, and then we TP here, right? So the golden entry zone, is actually here. And then if we want to make money again using this setup, well, it needs to meet my criteria, which is I need to allow myself to be patient enough to wait for the price, to went from here and then here and then here again, and then we're gonna do here again, right? So this is gonna be a better setup to do. Okay, now let's zoom in and take a closer look for the 1 hour chart. See, so entering right here is not really a good idea because the price is constantly trying to test this area. You see, even though that it is forming a compression, but the compression is not as strong as we think. You see, the compression has failed again. So for USD CHF, it is invalid for us to trade today. because we've missed out, we've already missed the second chance for us to trade it. This one we did make a profit yesterday, but for the second one and the third one we didn't manage to cash it because I'm also, after the first trade I went to do my thing already, so I didn't actually pay attention for the other two attempts. Okay, so if we want to like keep on moving it, yeah, we can still do it because it is still, in a formation that is still playing around. We still have plenty of room, to really make money from ARM. Still, plenty of room, right? Still plenty of room right here to do ARM. Okay, but we gotta wait, or else, don't do anything. We follow our rules and same like how we do yesterday. Yesterday, USD CHF gave us some opportunity, but not today. As far as I see, it's still moving very slow. So the question is, which pair, is gonna give us the opportunity today? Now let's take a look at gold. All right. The gold market. Okay, same thing, same philosophy, where we're gonna trade ARM, Agreeable Rotation Model. First thing first, have a good look, right? Is it arm on or arm off? On or off, guys? Based on what I see visually, it is on. But we cannot depend on merely by our eyes. We need to use, something that is beyond our eye. Okay? If we really take a closer look, it seems like it is on. But it doesn't seem to me that it is still on right now. Okay? But it's okay. Let's, draw it. In auction market theory, if you use auction market theory to trade, you don't trade by predicting the market. You don't predict with trend. You don't spot things like higher high, lower low, and then higher high, and then you go up, lower low, you go short. No, it's not like that. In auction market theory, what you do is you try to understand the state of the market. Okay, so agreeable rotation model means that we want to spot for the place where buyer and seller agree to, make their deal. That is why to make their auction. Okay, so obviously it's around here, where the price is constantly being, the auction is being made. Most of the buyer and seller, shook their hands around this area. And the next thing would be, we're gonna take a look at, is it really that reliable? Okay, so we have two zones. Okay, so now we have it. Okay, so we're gonna use, the lowest price from the previous lowest candle, and then we're gonna take a look at, the current highest price that the market accepted to close, and we can get a good glimpse on currently, where is the market is agreeable to trade. Now, right now, we're gonna draw a trend line first around here. Okay, and then the second part would be somewhere around here. This is forming as well. The volume is actually increasing. Still very low. Still very low. Yep, got it. Okay. So if you really pay attention on, the current market state of gold, you can see the balance where buyer and seller agree, which is around here. But it's starting from here, okay? When it start from here, the market start to compress, and then it forms a breakout. And the next question would be, after the breakout, did the market find a new place, a new zone to form a new zone of continuity, right? Did it have a very strong pullback? Now, to be honest, based on what I see right now, it didn't have a pullback that is strong enough like this one. You see, this is a strong pullback. Now, a strong pullback comes back here and then it starts to form a continuity, but it didn't happen. You see, it is a very slow pullback. It means that most probably that currently for the gold market, XAU is currently searching for a new realm to form a new zone for balance trade. Okay, but it is still constantly in a place where it is testing, and it is, like I say, it's still in the middle ground. And when it's still in the middle ground, we don't really know, how will it be moving, because we don't predict market. But based on what I see right now, it is in a motion that is searching for a new balance zone. Now, right now, we're going to zoom into 1 hour and let's take a closer look. Is it like I'm on or I'm off? Okay. Let's zoom in, have a closer look. Risky ask, so is this considered arm off? We cannot make the decision yet. I'm still analyzing. Okay, patience, guys. After the breakout, it is off. But then the next question would be, because the market is in search of a new continuation, so we are actually trying to see, is it like forming a new continuation? To put it into a perspective, okay, to put it into a perspective so that you guys can really learn from, what I'm trying to say is this one. Charles actually asked, want to learn both. So I'm going to give you guys a short, brief, and short class about what do I mean by auction market theory. Okay. Okay. So can you guys see my chart, my slide right here? Okay. So you see how most people actually enter trading. Most people enter trading because they see profit. This is the most shallow one. Okay, the most shallow one. And the second shallow motive is to see people lifestyle, right? For example, right now I don't have to go to the office. I don't have to go 9 to 5. I can just sit in front of my desk, sharing my knowledge, trade myself, and make money. So this is a lifestyle. And some people see confidence. Wow. Some people see confidence. that, wow, you see, CG, you can talk so well, you can teach so many things, you're so confident. Guys, don't believe in this shit, okay? What you need to believe in is your ability to see the structure, okay? The ability to see the structure. Because only when you see the structure, your eyes being awakened, and then you might have a chance to become a profitable trader. So here's the thing. How does price actually move? Price move to find agreement. Okay, price move to find agreement. Agreement between who? Agreement between buyer and seller. Buyer and seller. We are constantly negotiating, okay, to find a price that is agreed that, okay, this is the place that we're going to make a deal together, shake hands, and then we move on. It is a constant event that is always happening, okay? So that is why I'm saying that you cannot find the correct answer, because the answer is always changing. You get it? So now back to you know, the chart, okay? Price, you know, when agreement actually breaks, okay, this is really, I want you to pay attention. When agreement breaks, the price start to surge, okay, until a new value is found and the auction continues. Guys, I want you guys to really pay attention on this one, this too. When agreement breaks, okay, and the price will start to fly around, and then it start to find a new value, and then the auction between me and you, we can start to play again, okay? So you see, if you really understand when agreement breaks and price surges, and then in 3, 2, 1, and I open it, close this, and then you can see what I'm trying to tell you. Okay, can you see clearly now? Okay, this is where buyer and seller is agreeable, right? And then did the price break? Did the price break, guys? The price break, then the price start to aim for, to find a new zone. Now you can see it. I hope that you guys can see it, because I'm teaching this, you know, free for you guys. This is something that I teach in our VIP class, but right now I'm just teaching you guys for free, okay? So, yep. So now the price is currently, like, you know, forming, you know, looking for a new formation. And the next question would be, is it currently in a phase where it is, you know, reliable for us to see that it is actually forming a new wave? But let's take a closer look, okay? You know, like the compression move on, breakout, and then being rejected. This is a good sign, you know, a very strong pullback, and then it start to compress and then break out again. You know, I'm gonna show you guys, okay? The breakout continues, and then being rejected, finally being pulled back to find a new auction zone for balance, and then it start to form a new compression to expand, and then it start to break out. But here's a good sign. Here's a good sign. Now the good sign is this: the current, you know, pullback is not as strong as this one. You see, it is actually trying to, you know, form a lower lows, and it seems like the market is going from arm off to arm on. Okay, it is actually moving. It's like this. I'm off, and then it's like suddenly try to go on again, right? So this is what is happening to the market. So do we have like a potential entry? Yes, okay. But first we need to see that what really will make our hypothesis wrong. Now, first thing first, if the market actually went from this zone and then it keeps on climbing, and then boom, you know, across here, and it start to climb up again, well, guys, it means that, you know, it is wrong for us. Okay, so I'm gonna pay attention on this area. Okay, this is the red line. I'm gonna draw a red line. Okay, this is the red alert line. Okay, yeah, maybe not that far here. Okay, so if the market keep on going and touches this zone, and then you have a breakout, okay, it means that it is invalid. But right now, do we have a potential trade? Yes, but I'm going to control the lot size. I'm going to control a lot size, maybe just like 0.7% of my original lot size for this one, okay? Because the market is still forming a compression, and then it is testing, still coming back up. But at least I know where am I wrong, okay? So it means that if I want to place this trade, then let's go to 5 minutes. Okay, if I want to place a trade, how would I place this trade? Well, take a closer look. Still not the best. We only wait for the best. And based on what I'm looking at now, we don't have the best high probability trade for us to make a profit. If we enter here, the probability is going to be low. Okay, because the compression is still forming. See? And it is somewhere around here. Can we place a trade? Well, what I'm going to do, I tell you what, this is what I'm going to do. I'm going to set alert for this zone, and I'm going to set an alert for this zone as well. Okay, so 2. I'm going to use this area and this area as my indicator for entry. So there's 2 ways to entry. The best entry would be this one, where the market, climbing up, down, up, touches here, okay, and then we can do a short trade. This is the best one, and the second best one would actually be this one, okay, where the market is currently moving like this, and then it start to go down. Okay, the first one I wouldn't take the trade, definitely not going to take the trade. I wait it to go climb back up again, and then I'm going to take the next trade. Okay, so we are talking about 2 potential trade. The first, high probability trade is this one, this entry, and the second one would be this one. Anyone still following me? Okay, 2 trades. So both is gonna be like short position, but this one I'm gonna make it very tight, very tight. Yeah, this one I'm gonna make it like this. Clone. Okay, yeah, somewhere around here. So yeah, this is the setup. But still, it is still moving like this. So we gotta wait, and it is still moving very fast, compressing, going down, which means that we gotta wait, a little bit more patience for this one. Yeah, we do have opportunity, but the odds are not with us, but it's fine. I'm gonna show you guys a snapshot. So yeah, alarm stat, and I will see how it goes. Okay, so take a closer look. USD CHF is like swimming It's like swimming around here, It's too far. It's too far, guys. USD CHF, it's too far. We want to wait until it touches here. Okay, but so far, nothing much for us to do. But gold, better opportunity. I'm going to put it in pending, give it a label. Guys, see it's like currently moving, try to penetrate down. It's currently trying to test this area. Look at this candle. Trying to charge down. But the first breakthrough, I'm not going to do anything. For the first breakthrough, let it like penetrate to it. And I'm going to see that will it like rebound. If it like rebounds, and then if it didn't have that kind of momentum that we are looking for, and then it keep on going down, we're going to take a trade for that one. But now, nothing much. Well, Risky, oh shit. Risky, you say like today look like we'll be waiting days also. Well, unfortunately, guys, I can only speak the truth. I try my very best to provide signal for you guys, but the truth is, if you were to become successful in trading, most of the days is going to be waiting days. You see, there's a few ways for you to make it in trading. First way, you take a lot of small losses. Okay, it is part of the game. You take a lot of small losses. It is part of the game. If you don't want to take a lot of small losses, then there's a second choice. The second choice would be waiting, because waiting is actually better than constantly taking small losses, right? You gotta understand, guys. It's not like you take 10 small losses, 20 small losses, 30 small losses, that equals to win. It doesn't work that way. You can take 1,000 small losses and you end up bursting your account as well. Okay, so if I were to really, put it into a perspective, I'm gonna write it down for you guys so that you guys understand. I would say that waiting, or anyone play poker here, fold, which is wait, is much more important than small losses. Okay, and small losses is much more important than, I would say, force trade. Okay, this is the rule. For me, I prioritize, folding. I don't even want to take small losses, even though that I understand, I can take small losses, but folding is actually way more important than small losses, and small losses is way more important than forcing a trade that the probability is not with you. Okay, anyone that agree with me, type agree in the chat box so that we're on the same page. A big part about profit in peace is to really teach you guys how to make money peacefully. And even though that I understand as a live streamer, I would really appreciate that I can create excitement all the time. And I know that some of you guys want that excitement all the time, right? I know that you guys want the excitement all the time. But we cannot function well in trading if you want excitement all the time. It is okay. For example, you come to the classes, and a big part about me doing live stream and teaching you guys stuff is, entertain each other. It's like you and I, we go to the gym together, and it's much more fun, right? It's not boring. You can do like squats, I can support you a little, You can do some push up, bench press. I can support you a little, and when I do, you can support me a little. We can chat so that it is not that boring and it is not that tiring. That is the big part about doing live streaming. That is the big part about, live analysis and trading. So that we are not like a bunch of stupid gamblers that are, you look into my eyes, I look into your eyes, are like, oh my god, CG, can we like click the buy and sell now? Can we do that? Guys, it is not like that. If you're looking for that, you're not trying to trade. You're trying to go to the casino with a host that is constantly saying that buy, 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 buy. You get what I mean? And Sandy say, of course, not every signal is accurate, but the success rate is pretty high. Yeah, to be honest, we don't have to have very high success rate. Okay, it's like 50-50%. We are not seeking for accuracy. Okay, so Sandy, I'm gonna like, you can only make money by following consistency over the long term. Yeah, you cannot actually make money from accuracy. Okay, Sandy say, of course, not every signal is accurate, but the success rate is pretty high. To be honest with you, my success rate is not high. My success rate is actually 35% to 40% only. But still, eventually, after a year, I still make money in my portfolio. Why? Because I aim for asymmetric instead of accuracy. I don't aim to be accurate. I'm a human, guys. I'm a human. How come I know the answer that is constantly changing? Still remember the class? Okay, still remember what I'm teaching you guys? I'm a human. How can I actually understand, what is actually happening on the market? So it doesn't work that way. Okay, it doesn't work that way. Okay, so for gold, at least we have opportunity. At least we have opportunity. Something is better than nothing, right? I'm gonna leave this here to remind myself as well. Okay. Any pairs that you guys want me to like analyze together with you? We have silver, we have euro US dollar. Let's go to the market and try. Sometimes I need to borrow some luck for you guys as well. Sometimes the luck, sometimes today I don't have the luck, sometimes you guys have the luck. So borrow, I'm gonna leverage on your luck as well. So we're gonna vote. Risky says silver. Come guys, which pair do you think that you feel that is gonna be a lucky day? The market there is gonna, it feels like the market is gonna have opportunity for us. Okay, yeah. Yeah, Solomon, I agree with you, right? It is not 100%. So risky says silver. Anyone? Come on, guys. Which pair that you feel lucky, that you feel have a sense of luckiness? Come on, let's vote. Risky say let's go for silver. Anyone? Vote for your favorite pairs. Come on. Vote for your favorite pairs. We need some good luck, guys. We need some good luck. Okay. Okay, somebody says we have two silver. Let's go to silver. Silver currently trading at $90. Okay, $90. How much did it went? Wow, it went from like what? It went from 119 all the way drop until like around $70. Around $73, and then it started to climb back up again. Okay, cool. One losing trade doesn't mean strategy bad. Yes, Christina, one losing trade doesn't mean the strategy is bad, because we are not taking exams. We are not taking exams, okay? Oops. I love to listen to jazz recently. Jazz while I'm doing live stream. Maybe you guys can't listen to it, but I'm actually playing some jazz. Really soothing, really, calming my nerve down. Because when you're doing live streaming, right, there's a few things that's going on in your brain. First, there's you want to perform, and the second would be you want to interact with your audience, and the third thing, you need to analyze the market. So imagine like you have like three, four things going on in your brain, and every time and after I do a live trade, I do feel tired, man. I do feel tired because there's a few things. It's like you trying to master a few things all at once. So therefore, I always put some really soothing music around me, and just to chill, guys. Just to chill. Brian say that what do you think about the current trend of silver? How do you see it moving? Thanks for asking that question, Brian. Well, how about me asking you guys? Okay, that question. Okay. Now let's take a look at the previous price. Silver is, surprisingly strong. I didn't actually go for the fundamentals, but based on chart, you can see that it is, climbing, constant climbing, and then when it reached the point, it didn't form, a zone. It didn't form a zone. It actually went like all the way down, like crash it all down again. But right now it start to like sort of like finally find, a place where buyer and seller are much more comfortable to trade, which means that most of the buyers and most of the upside is being cleared already. So I am feeling good actually for silver trade. For the silver trade, currently, at least based on what we see right now, it is currently in a zone that is much more smoother to trade. See, it is much more smoother. You have like price being accepted, close and open, uh, overlapping position, which is good. I love what I'm seeing. Right, this signal right here is extremely good signal. Okay, and then you have another few good signals right here. Also good signal to me. So these two touches actually reveal to me that the price is actually trying to test around here and play around this place. But before that, in order for me to get a good glimpse on what the market is actually doing, we need to use my favorite indicator, which is the fixed range volume profile. And what we're going to do is that we are going to really try to aim from, this place, and then we're going to aim somewhere around here. Yep. Okay, now we got it. Okay. So you see, based on the volume profile, we can see that buyer and seller is constantly trading around this zone. Okay, it is constantly trading around this zone, $77 around here. And then we gotta like place a small level here so that we can have a good glimpse on what the market is actually doing. So we have two, reliable sources where the market is constantly, trying. So the strongest range is actually here, but I would actually add another layer. Okay, I'm gonna only use like two key levels as a reference. So guys, do you see that? So we have like Okay, we have a zone right here. So we have a potential arm on. Okay, we have a potential arm on where we know that between buyer, okay, and seller agree to play around this little triangle shape in this particular area. So based on the macro point of view, 4 hours H4, it is okay. And the price is currently forming a compression, which is we cannot like overlook that. We need to like really pay close attention as well. So let's take a look at the compression. Is it a valid one? Yep. See, there's a compression. Okay, we have a compression. So now, the first thing first is to ask ourselves, is it, a reliable source? Okay. From a macro point of view, okay, from a macro point of view, you see we have one stop right here. It start to form a lower lows. And then it start to form another lower lows. Okay. So dot. Okay. So it start to form, you see, a downtrend around this zone. And then it start to have a breakout to destroy that trend. And now the next question would be, if we were to really place a bet that the price is going to, being pulled back and absorbed by this entire zone right here, which is arm on, the next rational question is to really ask ourselves that how, what does it mean for the price to really be invalid? Okay. Now the thing would be is actually this particular zone. Okay, this particular zone. I'm gonna do like a red color. So red color means that, if the price actually, touches here, it start to have like a breakthrough. Okay. So if it start to, like really try to go from here and then it break this point, okay, it means that it might probably keep on going up rather than going down. Okay. But right now, based on what I'm looking at, let's take a look at the 1 hour. It's still compressing, slowly forming a formation, climbing up, and then, try to, it's still forming a compression. You see? Right here, it start to form, agreeable, and then it start to have a breakout again, which means that, the market is still in its way to look at a new zone. After the breakout, it didn't really have a very strong pullback. And okay, is this a tradable trade? I'm going to wait, okay? What I'm going to wait is that I want to see, is the market momentum, going to, break through this ceiling right here and without turning back. Okay, so yes, it is still possible to make a trade, and but the lot size, I would really give a very small lot size, a small one. Okay, um it would be like this. It would be a short trade that I'm going to position somewhere around here, but I'm going to use a very, very tight stop loss. Okay, very tight stop loss. Somewhere, right? Somewhere here. Okay, so if it hits this, then it means that our strategy is gone. It doesn't really happen. And we're aiming for, like, asymmetric kind of profit. Hopefully 1, 2, 3. And yeah, it is possible to place a trade, but the trade itself for silver is going to be very, very small. I'm going to place a very small lot size for this one. Okay, a very small lot size. Okay, and the hypothesis that I'm using is, I'm assuming that the market, rather than keep on climbing up, the market is actually much more preferable to trade around this range. So what am I betting is that the market actually went from here, come back here, come back here, come back here. This is what I'm actually, forecasting. Okay, but no rush. Let's, you know, calculate the size, everything, and then we will start to make the trade. So it would be good if we do like a sell stop. More importantly, we need to understand where is our, yep. Yeah, we can do a small trade, but very small. Let's go to 5 minutes. Silver. No. I'm gonna set alarm here first. Okay, guys. So for silver, um, after I take a look at the market momentum, it is not really, that promising. The market is constantly forming, a new continuation right here, and I need to have more, context of the market is actually, you know, trying to come back to this range, okay? But still, it seems to me that the market has much more power to really trying to like, climb all the way up again. And for me, I think the signal that is not really good is that after, the market penetrate to this ceiling right here, and it start to form this. It start to form another zone for, agreeable zone, where now it start to seek for, another form of compression. So what I'm gonna pay attention is that I want to look for what kind of compression that it is actually forming. If the compression is actually forming towards like a shape that is, more bearish kind of look, and I'm gonna go for a short trade. But if the compression, let's say the compression is actually moving like this, then we can potentially do, a short trade, a short position here. Okay, but it seems like the compression is not really forming yet, so we're gonna wait and we'll see how it goes. So yeah, for silver, pay attention, but not to rush. It is not really, the market is not really, moving in a way that is in our favor yet. If you take a look at 1 hour, right, it is not coming back, you see. It is not coming back. It's very slow. It is very slow. It touches this point and then it keeps on climbing. Too slow. Okay, so my analysis for silver is this. Now, if we take a look at 4 hours, the 4 hours time frame, yes, for the 4 hours, we do have, a potential, zone that is forming. But unfortunately, the market actually shows a potential rejection as well. It's being formed as a compression point around here. And now it seems like the market is actually going through a momentum that is actually going to try to burst from here. Okay, it seems that way. And we need like some extra signal for us to trade. In order for us to really trade, we need some extra confirmation. So where does the confirmation actually comes from? So the confirmation comes from this. Okay, if the price break from here, okay, the breakout, and then it is being like dramatically pulled down, okay, and then it will come back here again, and then the second attempt would be a good trade. But before that, I don't think that it is, a trade that is worth our time. I will only aim for the second attempt right here. Okay, this is gonna be the second one. Right now, I'm thinking that it's gonna like, have a strong breakthrough, which is not really safe. I can already sense it. If you trade long enough, you can feel it. You see, you can feel that something is not right based on the price movement. It feels like a waterfall is almost trying to like boom, So um so my hypothesis is this. I'm gonna like, assume that the market is gonna burst and really try to break here. And then it's gonna come back down again. For the first trade, I'm not gonna do anything. But I'm gonna, make the trade for this one, the second attempt. Okay. I need to make sure that it is really, being accepted back, not falsely. So right now I'm not taking that risk for market compression. It is way too risky, to risk unnecessary money. So for this one, actually, is it gonna be fold? Yes, it's gonna be fold, because folding is actually much more important than losing small amount of money. You can call me boring, you can call me like stingy all you want, but to me, money is still money. And we've all been through times where we don't have any money. We all been through time that, even a few $100s is important for us. And I've been through those times. And to me, every dollar is precious. So that is why I'm not doing anything. But as for gold, yes, we have a potential compressing going down. So yes, for gold, I'm willing to take that chance. But for silver, I'm gonna pass. Silver is too risky. Okay, silver is actually too risky. Silver almost looks like it's gonna, like, really burst out from this area. So I'm not gonna take that risk. Okay, so anyone still with me? If you're still with me, click yes. Okay, or to say understand. So no silver. Okay, no silver, but gold, yes, gold, we do have a chance to make some profit, but not silver. So the one that I mark, red color, is actually means that we're gonna fold for today. Okay, I'm gonna show you guys. Whew. One by one we go through. Another one or two pairs. Okay, and that's it for today. And for information tonight, guys, if you're on TikTok, don't forget to subscribe to our channel. I do have our very own RX channel on TikTok where we update educational content, where we do live analysis as well. And tonight, Singapore and Malaysia time, 9 p.m. to 10:30 p.m., I'm gonna be live streaming on TikTok as well. For this one, I'm just gonna focus purely on TikTok. So it's not gonna be on Telegram, it's not gonna be on YouTube. It is purely gonna be on TikTok. Okay. So if you guys, want to learn, want to do some live trade with me, live analysis with me on TikTok, make sure that you subscribe, follow our channel, our profile on TikTok. Okay. So it's gonna be tonight at 9 p.m. to 10:30 p.m. 9 to 10. Okay, I'm gonna do some live trade, live analysis on TikTok. Okay, so it's not gonna be on Telegram, it's gonna be on TikTok. Now, before this session ends, let's go. I will try my luck. Okay, I'm gonna go for Australian dollars and AUD. Let's take a look at Australian dollars. Well, it is not bad, guys. You see, Australian dollars, it is actually not bad. Okay, first thing first, zoom in closely and we're gonna draw the lines. Okay, we're gonna draw those lines and as precise as possible. I know that it doesn't mean anything. It doesn't mean much, to be honest. Drawing it precisely doesn't mean that I'm gonna win more money. It just means that I have a sense of comfort, or a subtle sense of a grounded sense. You see, that is why I try to draw it like really precise, especially when I'm doing ARM. Nope, this is not the level. This is the level. Okay, this is the level. And then we've got to find another new level. Nope, this is definitely not the level. It might potentially be, but it might potentially be, but a much more reliable one is actually not this one. You see, here only have like few touches, one for a while. it has motion right there. The price is like, auctioning buyer seller around there, but after a while it start to have a breakout, and then it start to form a new zone around here. Okay, so I'm gonna say that a much more reliable level is actually somewhere around here. This is a much more reliable one. Okay, so in order for me to have a real good glimpse on is this a relevant level, I'm gonna use my favorite indicators. Fixed range, fixed range. Yes, we do have it. Yep, it is around here. Yeah, very tight, zone. The market is constantly, you know, trading here. Very, very chaotic, the buyer and seller is still in a negotiation phase, and the negotiation is actually very fierce, between buyer and seller. It's like, okay, I'm gonna agree with you, we're gonna go to this price, and then no, and then I'm gonna agree with you, and then no. All right, I'm gonna agree with you, and then no. So you can see that what I'm trying to say is that it is chaotic. Okay, it's not like a very chill market. If you really use, a market like a fish market to look at the chart, you can feel that the buyer and seller is like shouting. Okay, it's like shouting with each other. It's like shouting like, no, I don't agree. It is not like chill. If you compare to like gold just now, the gold market is very chill. Everybody is like chill. Okay, we're gonna do this, but this one, no. This is like constant breakout, constant expansion, breakout again, and then back to the zone again, and then breakout again, and then back to the zone again. The only reliable source that we have right now is that you can feel that it is extremely, extremely tight. Okay, it is extremely tight range for us to trade. But we can zoom in to the 1 hour and take a closer look. Okay, it is very volatile. Um, it is chaotic. Okay, it is it is chaotic, and I want to really show you guys what do I mean by that. And when you're looking at market like this, you can't really give you that sense of confidence to trade, because that the buyer and seller is now constantly in a motion where they are pretty much very tough to agree on what kind of level that they agree to make a trade, to make the auction. But we can still make some measurement. Take the all-time high, and then we're gonna go to the lowest. Yeah, you can see, right? This zone, and the second one. Yeah, so we found it. So try to imagine, like, you want to like make trade in this kind of market. Is it like worth it? Well, the tradable range is like very tight, very small range. It's like very like a tunnel. Okay, you cannot make a lot of money using this kind of range. It doesn't have that range. And let's take a look at the 5 minutes. Ooh, it is flying. It is flying out from the zone, right? So, okay, here's the thing, guys. If you want to make money in this kind of market, ARM, okay, using agreeable rotation model, the only place that you can make money is here. But the problem is, the problem is when the market is going like this, like a crazy wave, like this, like this, like this, like this, you can't really have a good range of to help you to make a profit. So if you want to make a profit, is it like worth it? You need to ask yourself, is it like worth it? I personally think that it's not really worth it. Will I pay a close attention? Well, not really. If I want to pay attention, I would rather spend my time on, waiting for this, which is, it has a potential entry already. You see, it is start to form, it is starting to form a compression, a breakout, and then a pullback, and then we go a sell stop. Okay, a sell stop. It is much more valuable for to place a trade for gold. So for gold, yes, we can, start to give attention already. Okay, which is now currently happening. And for Australian US dollar, it is like the wave are too chaotic. We cannot do ARM. The only place that we do ARM is here. And the only way that I want to do ARM is that the market goes like this, it forms a compression, and then it starts to form a wave. And then if it goes down, well, we can do some scalping if we want. We can do some small scalping here if we want to do so. But just a very, very tight stop loss, and we'll see how it goes. Okay, but for now, AUD, USD, I'm gonna fold. Not worth it, not really worth the time. So, yep, not really worth it. And, I would rather wait for the gold market. Okay, guys, so if you really, want to take something out of this live stream today, I think the one that you should give attention on is actually this one. Okay, we might have a potential entry for gold, and I'm gonna write it. I'm gonna draw it again for you so that you can have a better understanding. So what we're gonna do is that we're gonna wait for the price, to went from here. It already start to form a compression. It already start to form a compression. Okay, but the compression, and then it's gonna like, try to come back to this zone. But if it fails, and then it's try to like penetrate again, okay, and then we're gonna do our trade like this. Okay, if it fails, we're gonna do it like this. So anyone with me? So for the goal setup, we are gonna do it this way. Okay, after the breakout, and then we're gonna wait for it to being like a pullback, and then after the momentum, we're gonna like ride it, and then we're gonna take a short position for the gold. As for now, after analysis for silver, USD, CHF, Australian US dollar, to be honest with you guys, nothing much. The only thing that is worth watching right now is actually gold. It's actually gold. All right. So a quick recap, on my thoughts of today's market. Basically, what I'm showing you today is about how do I trade intraday trading. Obviously, I don't use a lot of fundamental analysis. I use a lot of technical analysis, but with a hypothesis of auction market theory. So I'm using auction market theory as my base hypothesis to build my trading strategy. I have two trading strategy. Number one is ARM, which is Agreeable Rotation Model. And the second one would be second wave probability, where I trade and hold longer positions. Now, 90% of the time when I'm doing intraday trading, I use ARM. The reason is because that it has a more opportunity for me to make some money. I don't have to wait for the news. I don't have to wait for the trend. All I need to do is to be aligned and position myself where the market actually has the range, such as what you see gold right here. You know, it allows me to have that kind of range of high probability price acceptance back to the balance zone, and I'm gonna monetize on price acceptance. I'm gonna make money from price acceptance. Okay, so that is usually how I trade. Now, the big part about trading is this: you've got to train yourself to really understand that you cannot judge your trading strategy just by one trade. In trading, after you place the trade, what happened next has nothing to do with you. So therefore, I want to further emphasize, something that I teach you guys today in back then about risk management. So I'm not sure is Charles still here, but I'm gonna like further emphasize this so that you guys can really understand, the game that we are playing. Right? So I want you guys to understand, okay? In the school, wrong ends the game. In trading, wrong begins the game. But more importantly, before the class ends, I want you guys to understand asymmetric is much more important than accuracy, right? You lose small so that you can win larger. And more importantly, I want you guys to understand wrong is the new norm. Losers is always small, and winning must be large, okay? Stupidly large. This is asymmetric trading, okay? So this is why I want you guys to really train yourself. Accuracy is not your advantage in the market. When I'm doing live stream, yes, I do have that kind of urge to have that kind of accuracy so that my audience, my customers will feel that, wow, CG, you are very good in trading, you are so accurate. Yes, I acknowledge that. Most of the time when I'm doing live stream, it is a performance stuff, okay? It is something that is performing, like I'm trying to perform. I do have that, I'm a human being. But still, when 90% of the time when I trade myself, I don't really strive for accuracy. I strive for asymmetry. And during live stream, even though that I want to show my skill, I want to show everything, but still, obviously, after a full 2 hour session, I still couldn't provide you guys a very, exciting kind of entry because I need to stick to my plan. Okay. And if you guys, if you are the kind of person that want to look for exciting trades, exciting copy signal, maybe my class is not the one for you. But if you appreciate a rational, high probability thought process that you won't feel tired of analyzing the market hand in hand together with me, welcome. I am your type. I am your cup of tea. Okay. So yeah, anyway, for those who really want to learn more about trading, you can come to the class tonight on TikTok. I'm going to do 9 to 10:30 p.m. TikTok live to teach you guys how to trade, share about my trading setup, and perhaps we're going to review about this gold setting tonight as well. And last but not least, thank you very much guys for really investing almost 2 hours of your time into my live stream. If you like what I teach, if you love to listen to how I analyze stuff, feel free, to follow our, TikTok account, our YouTube account, and really you can contact, our customer service and Grace to learn more about what our channel is. Now, last but not least, thank you very much. My name is CG, and I'll see you guys tonight. Okay, TikTok live. Remember to subscribe. 9 to 10:30 p.m. Thank you very much, guys. I'll see you soon. Bye.